Good morning, everyone, and welcome to the CBI's morning webinar for SMEs. For those of you I've yet to meet, my name is Deborah Fraser and I'm Director for Regions here at the CBI. Now, today's session is focused on SME priorities around finance. So looking at particularly government loan schemes and pay-as-you-grow, trade credit insurance, which I know has been a bit of a gnarly topic for a number of you, and open banking. Format is as normal. We will hear from 3 speakers, which we've got today, and then we will go into a Q&A session. As normal, go to the chat box and type in your questions, and we will look to get those answered as over this course of this session. If we're not able to do that, don't worry, we will try and come back to you on a one-to-one basis. Simon and Diane, who sit in the background here, are fantastic at following up on those on your questions. So do bear with us, and we will get back to you. The speakers that we have today are Chris Wilford, who's our Head of Financial Services here at the CBI, and great to see Chris, who is currently in our CBI HQ in the City of London. We've got David Beardmore from Open Banking, and we've got Chris Matthews, who's the CEO of Silverlink Clinics. Now, I will not take up too much time because I know you're keen to hear from the speakers, and we'll start off with Chris, then we'll go to David, and then we'll go to our second Chris. Chris Wilford from CBI is going to give us talk us through government loan schemes and revised terms, pay-as-you-grow, trade credit insurance, and looking at the potential extension or not to the backstop. So I will put myself on mute, and Chris, I'll hand over to you. Thank you.
Thanks very much, Deborah. Yeah, I think we can all agree it's been a really busy time, continues to be a roller coaster with continued uncertainty for business. And there's 3 major aspects to that, I think. You've got the resurgence of the virus, so it's a critical moment with a multi-speed economic recovery taking place against a backdrop of resurgence in the virus and constantly evolving local restrictions. We know Nottingham is in the press, the Northwest, but other areas potentially as well, all having an impact on demand and those knock-on pressures for businesses. Secondly, we have the winding down of business support. So we have seen lots of progress, especially in the winter economy plan, which I'll come on to, and the latest support measures to go hand in hand with the new tiering system announced by the Prime Minister early in the week. But we need to sense check if this support is enough, especially for hard hit sectors. And in particular, we are hearing a lot about building pressure within supply chains, both on the larger businesses at the top, but also the mid-tiers caught between those and their SMEs, and then the SMEs at the bottom. And really, with that supply chain pressure, we're starting to see people leaning in on payment terms, looking for extra efficiencies. And that's why it's great we're going to be talking about open banking later today, and maybe how technology can help alleviate some of that pressure alongside wider support from government. Alongside that, Brexit, our old friend, has not gone away, and that deadline is looming large. Amongst all of this, at the end of the transition period, in less than 80 days, with firms finding it difficult to find the bandwidth and resources to prepare for an outcome where the details remain uncertain. So lots of that uncertainty adding to the different pressures there. We're continuing to use insight and evidence on all these fronts to engage with government, and it's had a really positive impact. And certainly, I think the winter economy plan was a case in point. I think due to strong engagement and member insight, definitely from sessions like this, as well as our other series of different engagement points, we saw the new job support scheme, which was very similar to a CBI proposal, the extension of loan schemes and VAT deferral, so to provide vital easement to firms' cash flow concerns, and the announcement of a pay-as-you-grow scheme to give firms breathing space during the recovery. Now, a lot of that pay-as-you-grow, which was focused on the bounce-back loan schemes, which was to extend repayment terms from 6 to 10 years to make them more affordable for SMEs, but also for CBILS, the government extended the government guarantee to 10 years, hopefully to give lenders more flexibility. Now, this is the catch in this, though, is whilst this was announced, actually, because of the EU state aid framework, a lot of these extensions to repayment terms can't take place until January. So we do have a lot of frustrated members at the moment talking with their lenders, and they can't have that flexibility because it's not till January. We're working on that at the moment, and after this session my email will be circulated, and happy to work with members on that. Critical to the loan schemes, though, is, this is an evolving crisis, and the government support also has to evolve at the similar time. A lot of members took out their coronavirus loans for an initial 3-month period of disruption. We're now facing into 12 to 18 months with no end in sight. And particularly when demand, it's a very fine balancing act out there. And with the point of the coronavirus loans at the moment, when members took them, whilst there's a facility cap and technically you can go back, actually in practice you can't use a coronavirus loan to refinance another coronavirus loan. So we've got a lot of members facing pinch points in the system, and that's why a lot of our energy and focus now is on the new guarantee scheme that is due to come in January. Which would be a successor to the coronavirus loans, and we are really arguing strongly that that must be able to be used for growth finance, but also to refinance and restructure some of the debt that members are building up. It's a very dynamic picture, but it's also a very interconnected picture, because as well as the whole loan scene, we also have issues like trade credit insurance, which we know are critical in a wide range of diverse sectors, from advertising through to construction, and also in automotive and aerospace and very complex supply chains. Trade credit insurance, it both underpins a lot of transactions in those marketplaces, but we know it also helps support things like asset finance and invoice finance, which a lot of SMEs are using to meet their finance needs at the moment. The CBI work closely with the Association of British Insurers and others to secure a guarantee by the government to help support that market. We're now pushing for that guarantee to be extended through to June 21 to help support that and help members come out. And I think in all of this, it's a complex scene. It's this interconnectedness between finance, insurance, and the demand side thing. This is basically a fine balancing act, is that we've had huge government interventions, but we want the normal market to return. And if we want to pass that baton, government passing the baton on back onto the market, we need to make sure that isn't dropped. And so that's a lot of the big energy. And key to that, I think, is the use of technology and innovation, as well as pushing for government support. So I'm really looking forward to the discussion today. Happy to deal with any questions in the discussion as well, Deborah, but I'll pass back to you.
Put myself on mute there. So apologies for the dramatic pause. Thanks, Chris. It's ever fantastic summary, and yeah, I think we'll be coming back to you on sort of so what future government support might actually look like. I appreciate you don't have a crystal ball, but some thoughts on that would be I think probably appreciated. Right, if we next up, we're going to have David, who is Ecosystem Development Director at Open Banking, and David's going to take us through what open banking is, what it actually enables, the benefits for SMEs, and why it's particularly relevant now. So David, thank you so much for joining us. I'll hand over to you.
My pleasure, Deborah. Thank you for the kind invitation. Good morning, everyone. I join you from Nottingham now, just jumped into tier 2. Wonderful. So let me quickly tell you about open banking. I'm aware that some of you will know quite a bit about this, and others it will be quite new. I'll talk quickly because I've got a lot to get through. The Competition Markets Authority 4 years ago ran a market investigation into competitiveness in current accounts particularly, and it noted in there the staggering conclusion that current accounts were not particularly competitive. It particularly highlighted SME current accounts as being particularly uncompetitive, and a part of the remedy that the CMA put in was to introduce this thing called open banking. So the first question is, what is open banking? What do we mean by it? So the quick definition of open banking is this. Open banking is, it's the whole process of you as an individual consumer, or you as a representative of your business, choosing, and that's really important, that you choose with permission, with consent, to give access to your financial account data to an organization that is not your bank. Now, we call those TPPs, third-party providers. So I bank with Barclays. I'm choosing under open banking to give access to my Barclays current account to a third-party organization. And the reason I'm doing that, and the reason that many businesses like Chris that you're going to hear from shortly choose to do that, is because those third-party organizations will provide services, products and services that will help you as a consumer, or you as an SME in this case, to run your business and to make better use of your bank account. Now, you might say, well, surely that's what the banks are there to do. I'm not here to knock the banks, but the weight of evidence is that particularly over the last couple of decades, as they've reduced the services to SMEs in particular, that idea that you have an individual bank manager who knows your business inside out, who's looking out for you, looking for the pitfalls that are ahead, and proactively managing that on your behalf, just doesn't bear up. It's not true. And what there are, though, are many third-party organisations, TPPs, I'm sorry, we're full of acronyms, TPPs, third parties, who will do that. And to make those services available to you, they require access to your bank account. Now, you choose to do that, it's under your consent. You have to re-consent every 90 days. That's the law at the moment. So it's entirely under your permission. One of the questions that always comes up under open banking is it safe? Giving access to somebody else to my account data, whether it's me as a consumer or you as a representative of your business? Well, I would argue that actually it's a lot more safe than some of the techniques that we have used in previous years, where for a third party, like, for example, your accountant or a cloud accounting platform, you might have to give them your login details or your username and password to your account. All of that is gone now. We've stopped doing that. We now use secure access through the online access to your bank account. So where are we at in terms of this open banking ecosystem that I lead for the implementation entity? Right now, we've got 273 regulated players, regulated by the FCA. So there are no, it's all authorised and legitimate, passing capital adequacy tests and so on. In there are 77 banks, so there are 9 that were mandated by the CMA originally, but then lots of others have joined in this whole process. There are 77 banks, so it's highly likely that whoever you bank with are going to be in this scheme. And there are now nearly 200 of these third parties providing those services. Now, what can open banking do for SMEs? I think there are 3 headings that I tend to speak about when talking of SMEs. One is around resilience, and so that's around things like cash flow forecasting and debt advice, which sadly in these COVID times is becoming more important. But the whole thing of resilience and helping an organisation to understand cash flow, to manage that cash flow, is one area. The second one is around productivity. And so Chris, I know, is going to talk to you about the third party that he works with, but also the cloud accounting platforms. So you will know better than me, platforms like Xero and Sage and Free Agent and Intuit QuickBooks and people like that. All of those have open banking embedded in. So what they're actually doing, those cloud accounting platforms, are you as an SME are choosing to give access to your bank account details to that platform. That platform, Sage, Intuit, whoever, is then proactively managing and looking at your account and looking at ways in which they can help you. And we'll come on to that. And the final thing is around profitability. And there are loads and loads of examples here. Two for example. One is finding if you need bridging loan or you need short-term finance. You know, in the olden days, you bank with whoever it might be, high street bank number 1, and the obvious thing is, well, I'll go to them for the additional finance. They may not be your best source of finance, and there are plenty of these third parties, brokers and so on, who can understand your situation and help you bridge those finance needs in ways that are more productive and more profitable for you. And another one, a really simple one, is if you pay suppliers or customers or suppliers or partners overseas, making foreign exchange payments, those are typically more expensive going through your high street bank than they are with third parties. So there are plenty of ways that we can do that. The question is it safe? I hope I've addressed. I can go into in a lot more detail, but you maintain control at all times. The way that you access open banking is through your online login. So whatever online security protocols you are happy with your bank, those are the security protocols that you use within open banking. There are lots more things that I can talk about in terms of how SMEs might benefit, but I think around this, resilience, productivity, and profitability are probably the key areas. Open banking has been now running for about 2 years. Its 3rd anniversary is in January coming up. As I say, we've now got about 600 entities that are working within that. There are more than about 2.25 million consumers and small businesses that regularly, daily, weekly use open banking. And the techies amongst you, last month, September, there were 541 million open banking API calls. In other words, a consumer or an SME requesting information, or a third party requesting information from one of those SMEs in order to help them manage their business. 541 million calls. That's a lot of activity, and that's growing significantly month on month. So we're in early days. We're about 2 years in, but loads and loads of benefits, and happy to take your questions later. How's that, Deborah? Is that 5 minutes?
That's great, David. Yeah, and thank you for making that just explaining open banking in such plain English as well. I think because it is relatively new, you know, people aren't necessarily aware. So thank you for that sort of description. It just shows what disruption is coming through, which our innovation team are always talking about. So it's interesting to see what's coming through in the banking world as well. Right, our final speaker is Chris Matthews. As said, he is CEO of Silverlink Clinics. And we've had feedback very much from yourselves that you'd very much like to hear from SMEs themselves who can share their sort of experiences. So Chris is going to take us through his experience of open banking, benefits to his business, some perhaps the initial skepticism that he felt towards perhaps open banking, but then why he chose to use it and his experiences to date. So Chris, over to you.
Thanks very much, Deborah. Great to be here. Thanks for the invite. So yeah, our initial experience was with our accounting package, which was Xero, which we had a feed through a third party. I think it's called Yodely. Very unstable, constantly breaking. We were trying to reconcile the bank every day. It'd be missing transactions. And then we bank with Barclays for the main business, and that process, once we use the open banking platform, is seamless. It rarely breaks. Every 90 days you get the request to reauthorize. It's done with your little pin century device. If you're with Barclays, I think other banks have similar devices, but it is just seamless. So all the tech problems have gone. My accounts team love it because as soon as something hits the bank, it's hitting Xero, and we can see it in the bank feed, and obviously reconcile the bank daily rather than having to do bank imports, as I know we used to have to before we moved to Xero when we had Sage. The second thing, and I think this was probably born out of our experience with using online banking in the first place. Using open banking with Xero, was we applied for CBILS funding with a third-party lender called Iowaka, and rather than sending them bank statements, which were almost instantly out of date and could perhaps not represent us in as accurate a way as we would have liked when we're trying to borrow money, the online banking, the open banking system allowed Iowaka access to our to view the data in our main current account, and as a benefit to us, it meant the speed at which we were able to get decisions on what was pretty much becoming emergency lending. We had to close our entire chain of clinics across the country on the 23rd of March, and we couldn't reopen. While we'd closed the clinics, we got no patients coming in, and so we could see cash flow was going to be tight. We do an annual exercise, a disaster recovery plan. I had not planned for closing every clinic for pretty much 6 months. I don't think any business did. So the disaster recovery plan maybe covered one, for one clinic closing because of some sort of electrical issue where we couldn't open the clinic, or a particular clinic was closed down because of a road closure. We'd not planned to close every clinic. Open banking allowed us, through Iowaka, for them to see what was going on. They could see that there was still money there. They could see when money was coming in, and they were able to make an incredibly quick lending decision, which I don't think I'm overstating it to say, allowed us to continue to trade. I can ally that with our experience with our high street bank, who we banked with for 30 years, and I can I could wax lyrical about how poor they were, but I'll just say, you know, the experience was much better with Iowaka than it was with our high street bank. You know, we had 90 days of trying to get some sense out of them, and we just gave up in the end. And within 20, I think it was certainly less than 72 hours, it might have been 48, we were able to access 6 figures worth of additional funds to allow us to carry on trading, and that was definitely down to open banking. Is that okay, Deborah?
That's great. Yeah, and I think, you know, I think one of the things that we were, you know, we're very, very sort of mindful of over sort of COVID is, you know, cash is king, and especially for our SMEs, it's been so important. So great to hear that you were able to access, even if it a little frustrated from your traditional route, that you were eventually able to get access to it. Right, Chris, I'm going to come to you to start with, because we've had a couple of questions come in around sort of, you know, what should future government support look like? Any sort of sense of what maybe CBI's sort of position is on that, and where we're trying to influence government, and I suppose the pressure points that perhaps you're seeing sort of on the horizon.
Yeah, thanks very much, Deborah, and great to hear about Chris's experience there. And I think we've heard that from a lot of members, people like Iowaka, Market Finance, Tide, Funding Circle, a lot of that agility and the ability to respond to emerging times, as well as other lenders adapting as well. I think that agility in this uncertainty is a big theme that underpins what we need next in terms of support as well, actually. So prior to the whole tiering system in England, and we've seen the circuit breaker lockdown in Northern Ireland, also working very closely with our Scotland members, it's clear further support is needed. So I think in the immediate term, we've been calling for local restrictions to go hand in hand with further support, and we've seen the Chancellor announce kind of an extension to the furlough scheme for tier 3 areas. That's the areas with the highest restriction. And another one, particularly for hospitality, is you know, that should really help them a bit more. But you know, it is tough out there. So I think beyond financial support, actually the biggest thing government can do is greater transparency and clarity in communication to really help provide a bit more confidence out there. And I think that balancing out that financial aspect and that confidence aspect going together at this phase will help. Going forward, as I said earlier, I think the new successor guarantee scheme is going to be critical for a lot of businesses, both to refinance the debt and potentially try and go for growth, but also potentially using tools to work closely with lenders on other indicators, because we know demand isn't going to be rushing back to what it was anytime soon. So what should we look at? Do we look at like things like historical performance to see how good management teams are? So you're making a judgment on the people in the business, and dare I say it, maybe using the tech to go back to a kind of an older style of lending where you have that very close relationship to help people navigate through. So I think government has a role to play in terms of the new guarantee scheme, definitely extensions to trade credit insurance scheme, but a wider thing in the whole confidence piece and making sure people know where they are, basically.
Thank you, Chris. And I think it's it's different areas going. We've just seen the news just pop up in terms of London. You've gone from tier 1 to tier 2, Chris. So changing
Oh, wow.
London on yeah. So just 7 minutes ago. Yeah. I know. Our team are furiously busy working on the annual CBI annual conference. Yeah. Actually, if you haven't registered that, do register, because it's absolutely looking fantastic, and I know they've got lots of contingency plans in place as well. So it will be going live. David, perhaps coming to you and sticking actually on the theme of the webinar. What are the learnings that are coming from the sort of COVID-19 sort of loan programs? It would be, you know, what can we take, you know, in terms of good and bad, in terms of how we're going to shape sort of learning going forward?
Yeah, no, it's an important point, Deborah. I mean, nobody's pleased with this COVID pandemic. Nothing good has come out of it. However, one of the things that has happened that the COVID crisis has demonstrated about open banking, and Chris Matthews articulated it absolutely perfectly, is that in these emergency times, where for one reason or another, to one agency or another, an organisation needs to prove something. It needs to prove who it is, what income it's had, what its financial position looks like, in order to make some kind of assessment of eligibility for additional funding, or for a grant, or for whatever it might be. And there are two ways of doing this. One is what Chris described, the old way, and that is, you know, you get your finance director to dig out all the paper bank statements. Well, you find them all, get them into the alphabet, into chronological order, take them or post them or send them off to a bank, where somebody within a number of weeks will look through them, probably come back with a whole pile of questions because they don't understand something, and a number of weeks later will make some kind of decision based on something that is historic. The alternative is to say to the bank, the government, the funder, whoever it might be, you know what, here's access to my current account. Take a look right now and see what my income has been for the last 2 months, 3 months. Make an accurate assessment and do it right now. And most of these lenders have got automated decision making, i.e. the ability to troll through statements and look at income and expenditure, group it, categorize it, and make a really, really quick and accurate assessment that is timely. So, I mean, it's slightly off beam, but for things like the self-employed, you know, if you go back to HMRC and look at records, you can often be going back 18 months, 24 months, but having to then make a decision about whether to get funds right now. Open banking says, as the iWalker and Sage or Xero, sorry, example that Chris used, is immediate. That says we can take a look right now and determine income and expenditure, determine profitability, and make an assessment within seconds or within minutes, rather than weeks and months. So the two things for me are that sort of speed and accuracy that go hand in hand around this additional funding thing. The other thing I just wanted to follow up from my earlier comment that I forgot to say, and I need to say it because we're a not-for-profit. We're funded by the CMA, by the Competition Markets Authority. On our website, which is openbanking.org.uk, there is an app store. It's not like the Apple App Store where you buy things. It's a promotional place. There's no funding. It's free for your members to access. But on there are 80 or 90 companies like iWalker that Chris mentioned that provide those services. You can search for consumer apps or for business apps. This morning I looked, there are 43 apps and services that are dedicated to businesses. And within there, you can then select further to find the likes of iWalker, Funding Circle, and others who provide these services. Go look on it. It's of no material benefit to me, but if it's of use to you, then please do that. And you can also get in touch with us for any additional help, whether it's COVID related or more general. So just thought that might be useful for your listeners.
No, really helpful. And what we'll do is make sure we send the link to your website as part of the follow-up to this. And actually, there is a silver lining to COVID. I get fresh bread delivered to my door by bicycle every Friday now from St Sidwell Community Centre. So, which is cracking. It's got a cracking bakehouse. Right, Chris. Coming to you, Chris Matthews. Question around accounting software. What software are you using, and does it make use of open banking?
Yeah, so Xero, we transitioned from Sage, not because we didn't like Sage, it's just I found, not from an accounting background, my accountants, we'd always used it when we changed accountants, and they're one of the biggest mid-tier promoters of Xero. I think they're like a platinum partner or whatever the program is. So we moved to Xero, and I've got to say, like, it's just outstanding, particularly with the open banking interface. You know, every account we've got is connected. Push of a button, you know, I can see daily if something. So on my phone, for example, you know, there's no payment leaves my business without me knowing about it. And as soon as it's happened, it's there, and I can see, is there a piece of paper to reconcile that payment as it's gone through the bank? You know, why is that money gone out? Sometimes, you know, certainly through COVID, every day, you know, it's not just looking at the bank feed, it's looking at Xero and finding, is there an invoice? Was something due there? Has a direct debit been left? Even though we've cancelled that, you know, we've shut that clinic down, or we've moved the business to another clinic. So it's been, Xero for us has been outstanding. I'm sure the other packages use open banking as well.
Yeah.
Yeah, thank you. And just following up on a question, do you see a benefit in using open banking details to obtain supplier credit?
Yeah, definitely. In fact, just I think one of the biggest things is that this perception around, oh, it's not secure, you know, around security, that, you know, talking to other friends who run businesses, you know, what you're giving your, you know, your lender or a supplier access to your bank account. He's like, no, I'm not. I'm giving them access to the information that's contained in the bank account. I'm not giving them that, you know, my direct debit card and the 3 digits off the back. And I think there is a general fear, which is, in my experience, is unfounded. And I've just made a note before, like the challenge when you're borrowing money is, as you've said, you very often you're reliant on accounts that were, you know, can you send us your last year's accounts? Well, you know, they're going to be at least 12 months out of date potentially. Whereas with open banking, it's there straight away, and so the lender was able, to make a decision within incredibly short space of time. And in the current climate, historic performance is absolutely no indicator to these to the lenders of future performance. You know, what we were doing this time last year, you know, March 2019 would bear no resemblance to what happened after the 23rd of March 2020. So with access to open banking through the platform, it's definitely enabled them to work quicker. And I think the more forward-thinking suppliers as well, you know, for example, we have one of our biggest suppliers is in France, our main pharmaceutical manufacturer, and their process, allowing them to see what's going on in our bank account to make better lending decisions, so that we can perhaps buy more off them because they can see the money, you know, we've got patients paying us and the money's coming into the account. That would be really helpful as well. So that, yeah, I don't think it's just with lenders. I think suppliers should probably cotton on to this, and, you know, and perhaps make their lending decisions based on the most up-to-date information that they're able to get from their customers.
Yeah, that's a really, really good point, actually, Chris. Thank you. So we just had a question come in around VAT registered businesses. Can Making Tax digital reporting system be considered as a tool and basis to assist businesses with financial forecast, modelling, viability and advice? David, I might come to you on that one, if that's all right.
Yeah,
Chris, I'm looking at the faces. I'm like, oh,
yeah. That might be one for the two Chris's, actually, both from a sort of policy and a practical point of view. I mean, we are working really closely with HMRC on enabling open banking, but to be fair, it's more from a payments point of view. So I haven't really touched on open banking payments, but that's the ability to pay anything to a government department, you know, with a direct from the bank account rather than going through the credit card rails. Which is a whole set of benefits, and that's going to be the next sort of big thing, I think, in open banking. On Making Tax digital, that's a bit out of my space. I'll probably, if it's okay, see if either of the Chris's had anything to add on it.
Sorry, David, that's me showing my ignorance. So I'm going to come to Chris. Chris Wilford.
Yeah.
Sorry, Chris.
No, I'll let Chris go first. Yeah.
I would say my hope for Making Tax digital is that it simplifies our process, and I love my accountants as I do. You know, not paying them as much in fees would make me happier than efficiently paying the government its tax as it's due. So I honestly think that Making Tax digital is a massive step forward. I do appreciate there are potentially flaws with it, but I think my own personal opinion is it's going to save me time and money with accounting fees.
Yeah, and just leading on from that, I think a lot of people would say Making Tax digital, and a lot of our members were engaged with huge hopes for it. There's a lot of potential in there. I think the key to all of this is wherever new data is being collected, there's always where there's a will, there's a way, and that's coming in. But beyond Making Tax digital, I think, you know, if we're looking forward about that, I think a big point today is about time is so precious and decisions being made. And a lot of this technology, including Making Tax digital and other things, is going to help that. The government's also doing a supply chain finance review, which is going to be really important to a lot of this and bring a lot of different things in. So giving that edge that Chris was talking about to make those credit coverage decisions and other things, it's all coming together. So wherever there's data, I think we'll find that helps this agenda.
Right, thank you, Chris's. And I'm gonna. There's one question that I might actually come to all of you for, which is around product innovation and what you see in the sort of near and distant future that could be a game changer for SMEs. And Chris Matthews, what I might do is actually, if you could wave your magic wand, what potentially what innovative what products would you like to see? So David and Chris, maybe what you see as the nearer future, and then Chris, is there anything you would actually particularly like to see or done better?
I think one of the things that'd be really useful, I'm guessing for, I mean, we're a business to consumer business rather than a business to business, but certainly if I was business to business, the ability to make credit lending decisions based on what your customer was doing rather than relying on things like Credit Safe or the risk disc, as it used to be called, the sort of the credit checking agencies. If you've got a good enough, I mean, we never treat our suppliers as suppliers. We've always we use the term, you know, they're partners with us because they're so important to our business. And I think in partnership, it's much easier to develop these tools where you can have access to our banking. So you can perhaps look, we need a little bit more time this month because we've had a slight downturn, but equally, when our income levels reach a certain level, we can pay you a little bit quicker. So having that tool, which is a two-way street where you could partner with suppliers, that would be I suspect a dream for many businesses.
Thank you. Chris, come to you.
Well, I think, you know, open banking has made huge strides, so that's exciting in itself, and the continued development of that. But otherwise, building on from Chris, that whole idea of using data to get into some of these business-to-business relationships and to bring those forward, and I think the forthcoming supply chain and finance review and other things around that is going to give a real moment of focus and clarity on what we need in this whole space to help that come. And business is going to need all the help it can get as we power through in the recovery. So I think that's really exciting.
Thank you. And David, final thoughts from you.
I mean, I've sort of trailed it already. I think it's open banking payments. There are two big sort of components of open banking. Much of what we've talked about today is around the data element, and Chris was exactly right. You're not giving access to the account, you're giving access to the data about the account, and that's pretty much what we've talked about. But then another part, which is just started to happen but is now growing and is a big area of focus for us at the implementation entity, is open banking payments. And essentially, probably the easiest example I can give you, the Captain Tom, the great 100-year-old gentleman, and his fundraising activity he did a few months ago for the NHS. I think he raised something like £38 million. If you, as I did, went on to the Just Giving site to make a charitable contribution, the usual stuff that applies there says, how do you want to pay? You want to pay by Apple Pay, credit card, debit card. But the top there was a thing that said pay by bank transfer. And that's an open banking payment. And what that does, it bypasses the credit card rails. It doesn't take you to log my credit card, type my credit details in, the CCV number, the expiry date, and all that stuff. What it says is, take the money directly from my account, in my case, my Barclays account. It takes you out of the open banking journey, takes you out of the Just Giving part, routes you to a screen that says choose your bank. I choose Barclays. Click on there. It then uses that online, that PIN Sentry biometric accreditation to get into my account. I get into my own account. I say, this is the current account. This is the account I want to make a payment for. Choose the amount. Hit enter. Takes me back to the Just Giving site. It says, fine, we just want to confirm it's from this account number, your account. You want to give this amount to Just Giving. Is that correct? Confirm. Done. That's open banking payments, and that works just as well for business as it does for consumers. And I think that will be a radical transformation of the part of the payments journey. That's really, really exciting. It's a big area of focus for us. We've got some consultations coming out at the moment, or in the next couple of weeks, around that. If that's an area of interest, then I'd be very happy to pick up with you or talk to any of your members about that. But yeah, open banking payments, very, very exciting stuff.
Great, thank you. Well, maybe we can include details of that into the
Yep.
follow-up email as well. Right, I'm conscious of time. We've only got a couple of minutes left, so I think we'll start to wrap things up there. I suppose just encourage you to keep looking at our coronavirus hub. We're doing quite a bit of updating there, especially we've had quite a lot of demand in terms of sort of good practice guides. So Maxine, who leads our work on that, is pulling together quite a bit of work. We've also got our UK transition hub for the fund that is Brexit. So do go and look on there. There is a lot of information for you, but also for members, there's a lot of information sort of sitting behind the scenes. And we will be coming back here in 2 weeks' time on the 29th of October. Do register, where we'll be looking at the employment landscape and managing redundancy plans. So not the most hilarious topic, but a really important one to get right, because it's people's jobs and livelihoods. So come and talk to us and join in that conversation there. In the meantime, thank you very much to Chris and David. We'll look forward to seeing you soon, and we'll getting that information out to everyone that's signed in today, and look forward to seeing you in a couple of weeks' time. Thank you.
Thank you.
Thanks,
Thank you,
Deborah.
Thanks, everyone. Thank you.